Okay, so the next story. First the formal remarks, then the story. Next, I'd like to introduce Governor Jay Powell. Actually, Jerome Powell, but last year we all were instructed that adults may call me Jay. So everybody got that instruction? Good. Governor Powell took office on May 25th, 2012, and he has served as an assistant secretary and as an undersecretary of the Treasury under President George H.W. Bush, where he was responsible for policy on financial institutions, the Treasury debt market, actually some great stuff out there when we searched the internet and looked at it, and other related areas. Prior to joining the Bush administration, he worked as a lawyer and investment banker in New York City, and from 1997 to 2005 was a partner at the Carlyle Group. Before his appointment to the Board of Governors, Governor Powell was a visiting scholar at the Bipartisan Policy Center, the only Washington, D.C. think tank that actively promotes bipartisanship. A Washington, D.C. area native, Governor Powell received his A.B. in politics from Princeton University and a law degree from Georgetown University, where he was editor-in-chief of the Georgetown Law Journal. Governor Powell serves as chair of the Community Bank Subcommittee at the Board of Governors. It's been great working with him. So here's the story. Last night, I was able to join Governor Powell at the airport. Initially, someone else was assigned that duty, but I said, wait a minute, you mean I can get 20 minutes in the car with Governor Powell? So I thought this was great. I had this chance to let him know what to expect and sort of set the stage for the day. And it was great, although he immediately found me out. He said, well, you're here. You probably want to tell me some stories. I don't remember the exact words you used, but you know exactly what I was looking for in that time. And he graciously allowed me to talk about the challenges that we see facing community banks, those challenges associated with regulatory burden. He asked me that hard question, and I hope you think about it today. What can we change? Not what we would like to change, but what can we change to make a meaningful difference in regulatory burden for community banks? So I guess it was a two-way conversation, and it was very helpful to me and hopefully allowed you to prepare today. I'll also mention that Governor Powell has agreed to really speak to the industry and take their questions later in October, on October 22nd, through a webinar program that we'll offer. And I just can't tell you how important that is to me to know that as chair of our Community Bank Subcommittee, you are willing to listen to the questions of the community bankers. So thanks for doing that, and please welcome Governor Powell.
Thanks very much, Julie, and thanks again for coming out to the airport last night. I thought you were going to tell the story about there were 5 Secret Service agents there to meet somebody that we didn't recognize. And Julie was getting ready to grab her cell phone to take a picture of the guy, and I had to stop her because I was afraid they'd arrest her. Kind of wish I hadn't, but anyway. So it's a great pleasure to be here today, and let me join Jim and John in welcoming you to the conference. I had the privilege of addressing the inaugural conference last year, and as chairman of the Federal Reserve Board Subcommittee on Smaller Regional and Community Banking, I'm delighted to return this year to participate again. As I don't need to tell you, community banks play a vital role in America's financial system, providing essential services to households, small businesses, and small farms in communities across the country. I thought John captured it very well in his remarks. Community banks differ from their larger cousins not just in size, but in the fundamental focus of their business models. Community bankers' primary objective is to serve the members of their local communities who are not only their customers, but often also their neighbors and friends. They've got strong links to the people and businesses that reside in their communities, as well as direct knowledge of local economic conditions. Those ties give community bankers a clear advantage in understanding local needs and tailoring their products and services to meet those needs. I'll confess that I never worked at a community bank. However, I have been a community bank customer, and I've had the great experience of the difference, as I shared last year in an anecdote that I won't burden you with today. But that commitment to provide high-quality service to every customer who walks in the door became clear to me at that point. Despite these advantages that I've mentioned, life has not been easy. The number of community banks has declined sharply over the last 3 decades, and many remaining community banks have struggled, particularly since the financial crisis. Although improving conditions have begun to provide some relief, banks continue to face significant challenges. The burden of regulatory compliance can be particularly daunting for small banks, not a headline for you. And competition from large banks and credit unions, as well as other non-bank financial institutions, is always a concern. My colleagues and I on the Federal Reserve Board are committed to making sure that we understand the challenges faced by community banks. One way that we further our understanding is to talk to bankers. The entire Board of Governors meets twice a year with the Community Depository Institutions Advisory Council, which Jim mentioned. There are actually 12 CD Act councils, one at each reserve bank, plus a national council, so we're very focused on this. In addition, individual governors talk frequently to, regularly, I would say, with community bankers. During last year's conference, as Julie mentioned, I spoke to a group of St. Louis area community bankers. I'll be doing a national webinar with community bankers next month, and in fact, I have a regular group that I speak to between each FOMC meeting. It includes a significant number of small bankers. And I find these conversations with people who don't live in Washington, don't come from Wall Street, to be enormously enlightening. And of course, this conference, which was conceived as a result of the successful collaboration between the Federal Reserve System and the Conference of State Bank Supervisors, provides an annual opportunity for community bankers, bank regulators, and academic researchers to come together to share ideas and insights surrounding the issues that matter most to community bankers. This year's program includes presentations by the authors of some excellent academic research papers, the unveiling of the results of a new survey, reactions by community bankers to the research and the surveys, and several interesting speeches, beginning with my colleague and friend Esther George when I finish. The primary focus of today's agenda is research. The response to the call for papers was quite impressive, and the research committee had its work cut out for it in selecting the highest quality, most relevant papers. The authors include academics and policymakers with backgrounds in law, economics, and finance. The topics covered clearly demonstrate a desire to promote a deeper understanding of what makes banks tick, community banks tick, and of how a wide range of government policies affect the activities, profitability, and viability of community banks. So I'll quickly just touch on the sessions. The first session considers factors underlying community bank formation, behavior, and performance. The first paper looks at the characteristics of newly chartered banks, where they form, and how they fare over time. The second paper also focuses on newly chartered banks, considering possible explanations for the near absence of new charters since the financial crisis. At the Fed, we pay a great deal of attention to this type of bank formation because it's the primary source of new competition in the markets where community banks compete. The third paper looks at how rivalry among banks affects their decisions to adopt new technology, and the fourth seeks to explain the persistence of low net income in recent years. The second session, after lunch today, addresses the effects, both intended and unintended, of specific government policies on community bank behavior. So one paper looks at how the 2006 commercial real estate guidance for banks affected loan growth. Another paper examines the effect of the creation of the Small Business Lending Fund on community bank lending to small businesses. And the third focuses on what happens when banks perceive that examiners have given them inappropriately negative evaluations. The underlying theme of the third research session is how broad government policies affect community bank profitability and viability. The first paper, appropriately, provides an overview of the effects of Dodd-Frank on community banks. The second paper considers whether a provision of the Jobs Act that modified the threshold for Exchange Act reporting for unlisted banks and bank holding companies helped or hurt small banks. The third paper contrasts the thousands of small community banks operating in the states with a handful of very large financial institutions, and proposes a new approach to regulation that recognizes the very different business models of these institutions. The fourth and final paper takes a high-level look at the effects of regulatory policy on the structure of the U.S. banking system and the viability of community banks. On day 2 of the conference, you will see the results of a recently conducted survey of more than 1,000 community bankers from across the country, as well as the feedback of more than 1,300 bankers participating in town halls. The presentation of these findings will be followed by a panel discussion by a group of community banking experts. So I hope I've succeeded in whetting your appetite for the sessions that lie ahead. I encourage you to make the most of this great opportunity. And I'm just going to close to say that I'm here because I believe that community banks play an important, vital role in our communities in this country. And I want to make sure that what we do in regulation and supervision supports that role and doesn't obstruct it. So thank you very much. I look forward to a great conference.